Right, this is going to be a video about how to make a trading plan. It's not going to be a huge video because it doesn't need to be. But a lot of people in the group obviously don't have a trading plan, which is not great, but it's something we can easily sort out. So you need a trading plan because the vast majority of people, well, in trading and Forex, it's very, very easy to find a strategy that works and will make you money. But the reason that people don't make money and 95% of people lose is because they don't have the ability to follow a trading plan, which sounds really easy and stupid, but it's not. Because if you read like psychology articles in the Drive and Member Zone and stuff like that, it's like human nature to go against the plan because of things like patience. And if you get a loss, all plans are going to get a loss sometimes because that's just the way the markets are. It's hard to take that, etc. There's loads of points and reasons why it's hard to stick to a trading plan. But the key thing is it is hard to stay to a trading plan. But also, if you do stay to that trading plan, then you will be profitable, basically. So we need to first set out what the trading plan is. Obviously, it's going to vary person to person because people from different areas of the world have different trading times. They trade different strategies, etc. But this is the basic template, I think, of what any trading plan should have. I always keep this at the top of mind now to always identify the market conditions first, because you need to know what market you're in, because you need to know how you operate. The plan will still be the same, but for example, in a choppy consolidated market, you're just going to stay away. In a a wide ranging market, if you look at the PDF I made the other day, it'll show you what this is. Then you can often take entries in both directions. Depends on obviously your plan, but that's possible. For retest, it could break up or down and then retest up or down. But then if it's trending, you only want to take with that trend. So that's important to know that first. But then I'll just fill this out basically. I won't do everything. My strategy obviously be a bit different to other people's. But trading time, obviously, like I said, you'll be in different areas of the world. I'm in the UK, so I trade the London session. So in my plan, I trade the London session. I can start anywhere from 8 p.m. and finish anytime up to 5 p.m. I don't take entries after that. I can write that in if I want to. I like to have all my positions closed by the end of the day, as in before I go to bed, because I don't like leaving them overnight for various reasons. One, it affects me being able to sleep, so I want to keep checking it. So I don't like that anyway. So I'll put London close. And then I'll also say have no positions open overnight. Some people might like doing that. It depends where you are from. If a session that you enjoy is open while you're asleep and you want to leave it open, then have that. But if you don't like that, put it in your plan and then stick to it. So it's been like last week where we had the midterm elections. The market was obviously really slow. I saw a few opportunities at about 4:30, 5, like the pattern I look for winding up, but stayed out even though I hadn't had a trade that day because of the slow market. I stayed out, so I was stuck to the plan. Even if you take a winning trade, but it obviously wins, but it was outside your plan, that is not a good trade. That is a winning trade, yeah, but a winning trade isn't necessarily a good trade. You always got to remember that, because if you don't stick to your plan, eventually those sorts of trades will not come through, because you've made your plan for a reason, because you know it works and you know it's profitable. So you don't want to be then taking trades that are outside of that plan, because even if they win sometimes, they are not in a pre-designed plan for profitability. So you are playing with the probability numbers there. You're just setting yourself up for failure, basically, and eventually it will catch up with you. So trading time, like I said, really simple. That's all it is. Strategy, this is the bit that will vary most from everyone listening, is because obviously I got into trading reversals and now I only trade, you've seen the PDF in the Drive, retests mainly, or reversals. So, or I like fib levels or not now as well, but you've got to narrow it down and keep your strategy simple. So if you're a breakout trader, you want to fill this area with, for example, I only use major levels. That's simple. I always stick to that. I never draw them on any other now, or fib. This one actually. But I never do anything other than those levels. Oh, actually, I'm saying this now. 1h4 or higher. Because sometimes, for example, when you're scrolling down, EU was like this. You can't see anything here. Even on H4, you can't see anything here to draw your level at. So I have to go maybe to the daily, or if I can't see that, I've got to go for a weekly to find a point. I did this on the line chart. You can see how it taps, 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 taps. And then funnily enough, when you look now, don't want to look on there, but yeah, look, it taps straight on. So you do see the levels hit. But yeah, you do see the levels hit. So that is what is in my plan, basically. But then, all right, a bit after that, you got your zones. Then you need to know what your strategy is, obviously. The roadmaps are going to be similar for everyone, but your strategy is different. If you're a breakout trader and you like taking trades direct, when they break, you got to define what your entry criteria will be. So obviously you need a zone break for a breakout, but if you need to see an M30 close, M15 close, multiple candle closes at the same time, you got to put that in here. You've got to put, if you want to see a big wick, or maybe obviously you don't want to see a big wick, but you've got to put in, I don't want to see the wicks. You might need to see a certain pattern on M15 or M5 if you do use that. You've got to, you want obviously momentum in your favor if you're doing a breakout. I don't trade breakouts, but this is what you obviously the sort of thing you need in it. Then with retests, my that and reversals, that PDF I made is pretty much the whole strategy, but you don't want to put the whole strategy in your plan, because your trading plan should be something that you can refer to all the time and understand really easy. My trade plan is written on an A4 piece of paper because I like writing it out. Only on one page, I can see it all. Everything's on there. Everything I'm writing on here or in all these sections will be on there, and it's clear for me and I know exactly what I'm doing. The strategy should be that you write on the trade plan should be only the basic stuff that is more the things you need to make sure you always do, because when you're making the trade plan, you should already know the strategy inside out. Like you should, if you want, make a big PDF about it, about your strategy and how you do it, like I did with screenshots and all that, because then you can refer back to it if you want a refresher on a strategy, but you don't want to be filling up your trade plan with strategy. You only want the simple things. So I can put in here, only take retests if that's what I'm doing. And then might need, always wait for confirmation candles. Only take retests after break of major zone price. This is just a sample. This is not my actual trade plan. Always wait for confirmation candles on at least M15, because I don't really believe in M5. I think it's a bit crap. There we go. You want the most simple things of your strategy on here, the things that you need to always do, the really key points. I might want always have momentum in my favor. It's literally, you need to keep it really simple when you put the strategy in the trade plan, because you want to know the key bits you've always got to remember, because then it's almost like a checklist for you in your mind. And if you've got a checklist of 15 pages like a PDF might be, how on earth are you going to remember that when looking back over it, when you can just have 4 or 5 points that you always stick to and you always know? So like I said, strategy bit is different for everyone, but keep it simple in there. And like I said, if you find you could be ambiguous on your strategy sometimes, make a PDF on it. I know that strategy inside out that I made the PDF about, because I had to explain it to people in a way that people will understand for 14 pages. They say you retain the highest percentage of information you retain when you teach it to someone else. So it's worth doing if you're ambiguous. Then risk and money management is another really, really key point. This should be a point that's similar for everyone. So minimum risk reward of 1-to-1. And that's just because you don't want to be risking more than you lose, than you could gain. Like, why would you? You wouldn't, with bets and things like that, it's a much less attractive bet if you can only win £50 when you're risking £100. Yeah, it seems like it's more likely in this case, but that's for gambling. But in reality, you're going to lose more. If you lose the same amount, you're going to wait, let me get this clear, sorry. You want it one-on-one because then you can lose the same amount as you win and come out break even. Whereas if you have a bad risk reward ratio, you're going to go from, say you lose 50-50 again, lose 50, win 50. If you've got a bad risk reward ratio that's under 1-to-1, majority of the time, you're going to end up losing money, even though your wins and losses are an even amount. So you want to have a good risk reward ratio of minimum 1-to-1, where the better it is, obviously, then the less you have to win to be profitable. So if you've got a risk reward of 2-to-1, where you risk 1 but you can get 2, you only need to win like 33%. Is it 33%? Like 33% of your trades. Don't know if that's the right maths, but either way, you need to win less to actually be profitable because your wins are bigger and your losses are smaller, basically. So this particular risk reward 1-to-1 should be the same for everyone as a minimum. Then money management. This is another big thing because you don't want to be. I risk 3% per trade. Let's put that in. Total account per trade. You don't want to be risking like 10% because you see people do it and they'll make a big amount of money really fast and they'll be really happy and be like, oh, I've doubled my account in this amount of time. But then as soon as that person loses one trade, that's 10% big hit to take off your account instantly. Imagine having a 10 grand account and instantly you're down to £9,000 when you lose. You can only lose 10 and you've wiped your whole account if you're risking 10% a pop or something like that. And I see people do even more. It's just not sustainable to do unless you're hugely accurate and only maybe lose 1 in 100 trades. It's just not sustainable. And it will really mess with your psychology as well, which you really don't want to do. So that's the risk reward. Risk management is quite simple, to be honest. Money management as well is exactly the same. So say you have a target for the week. You can do targets in the trade plan if you want. Although I don't think this is as advisable at the start because at the start you want to be just focusing on churning out winning trades, not actually on certain hitting targets because that can put pressure on you and make you focus on money more, etc. But say you do want targets, you can say if your risk, this is going off 3% risk per trade, so you can have one target is a 3% gain per day, or you can even have a 2% if you want. So then 2% gain per day is target 1. Oh, sorry, I'm typing more. 1, 8. There we go. 2% gain per day. Because this means you can have a risk reward trade of maybe 1-to-1 at risk 3% and say it's going there and you don't think it's great anymore and you close it for 2%. That's a really achievable target. But if it adds up, 10% a week is obviously a big increase a week. So then you can go for target 3 maybe. Target 2, sorry, is maybe the 3% a day, which means all you got to do is win that one trade. And there we go. And then target 3 can be a little bit more ambitious, so maybe be 5% a day. This is just very, it's not personalized or anything like that. You don't have to have targets. Personally, I used to have targets, but then I've been focusing more for like the last few months on just doing the setups right, because I find it makes you focus a lot more on the strategy rather than the money, because focusing on the money is one of the biggest problems in trading as well, and is what makes it hard for you to stick to a plan. Because if you think, oh, I've got to get 3% gain a day, and you've been waiting however many hours for a setup that doesn't seem to be happening, or for example, it's a choppy, crappy market that you need to stay away from, in the back of your mind, you're thinking, oh, I need to get that 3% a day. So you're trying to force setups to appear when they may not necessarily actually be there, which is something you do not want to do. Right, which is something you don't want to do, because then you start focusing on the money and not the doing the setups. So also for this, let's put a question mark here, because you don't have to have them. Can't even find the question. There we go. You could also do target is to Follow the plan perfectly. Correct setups. So now, even if you take, obviously no plan is going to be 100% accurate. It's just not possible. No plan or trading strategy is ever going to work all the time. So you could have, with this target, it can be, if you followed the plan and your plan say it works 90% of the time and you get a loss, but you followed your plan, you've still hit a target and you've done what you're supposed to be doing because you followed your plan, and you've just got the 10% of the time where you will get a loss with that strategy. You've got it because it's going to happen, but you've still followed your plan. So you have hit a target, and you're always hitting targets if you're always doing that. So it's good for morale, and it's just good. It's good practice anyway. Eventually this won't even need to be a target anymore if you constantly do this, because you'll just program your brain into always following the plan. You won't even process the rest of the crap that the market gives, all the other data that you don't need. You'll just purely be looking for the plan. So then trade management is another important one, because we've got up here, we've got how you execute the trade and what you look for. Here we've got how much you risk and the money that you put in to that execution of the trade. And now this is how you manage the trade once you've done all the above things. So for example, we can have things like once price moves, this is a thing I use, once price moves 10 pips in your favor, move stop losses to break even. This is good because it protects you, obviously. It protects, it's nothing worse than when you're in decent or big profit and then you see price swing back round and take out your stops because you think, oh, I should have banked this amount of money, blah, blah, blah. And then that has a knock-on effect of encouraging you to close trades early when they're actually quite good in future. So by doing this, you protect your capital as soon as possible, which is a very, very key thing for trading, because most traders lose. So if you protect your capital and you don't lose, already you're better than most people. So this is 10 pips is not a huge amount to move, especially depending on the pairs you trade. I trade GU, EU, and UJ. So 10 pips is a bit more in UJ, but on GU and EU, it can move 10 pips almost within like 10, 15 minutes. So you don't need to, you can protect your capital really quickly. So then this is something you can do. You can also, with this, you can also have, this would be in your strategy as well, but just for the sake of explaining it a bit more here, you can have multiple profit targets. So say you normally risk 10 pips, you could have, and you always want to hit risk reward of 1, you can have 1 take profit at 10 pips. So then as soon as you hit risk reward 1, you're paying yourself at least some money for however many positions you have. Sorry, some strange noise just came in. Right, you can have 1 take profit at this small distance away, and then you can maybe have take profit 2 at the next, because I believe in not necessarily just putting your take profits at random pip points, because it's a bit ambiguous. If you just want to think the market's going to move 15 pips, then it might not move 15 pips. It might move, there might be a minor resistance 14 pips away. So then it never hits your 15 pips, but it hits that minor resistance. So we want to have the TP at the next available, no, not available, doesn't matter. At the next support or resistance. These can be minor because they're targets. These can be minor levels. Like this could be a 15-minute swing high or swing low or something like that, just a minor level. Because we don't want to always go for them. If we're only using H4 zones, we don't want to always go for the next one, because that could be 50 pips away, and that's not always what the move's going to be. This is only, you don't have to use H4 zones, by the way. This is just what I'm doing. It's what I use. I'm just what I'm using as an example for the strategy and for this trading plan. But then you can maybe have take profit 3 as a runner. This is just an example of ways you can manage your trade and have targets there at different points. So like I said, you don't want to have, I don't think it's great to have profit targets that are set pips, but because this is only 10 pips, it is a small range. this is, again, only if you're having it. Let's just write this in here actually, just in case. Assuming you have 10 pip stop, just to be clear, you could have multiple profit targets, one 10 pips away. That's so that it's a risk reward of 1. So you can maybe have, say you've got a 30 pip stop on a trade, you can maybe have your first take profit as 30 pips away, just to keep just so as soon as you hit risk reward of 1, you then pay yourself some money, which means that already you've won, because then if you move your stops to break even and they get taken out at break even, you've still made money because you've paid yourself already when it's hit the first one anyway. So it's just a way of keeping a high win rate, keeping psychology good because you're always paying yourself, etc. Right, and then for rules, these aren't things that are necessarily in the strategy, because your strategy should have the clear rules of the strategy anyway. But for rules, I mean more like, these will vary more from person to person as well. Because, for example, me, I used to get worried in drawdown and then sometimes close, because it's better to close with small loss than big loss. That's not a good thing, because often it'd then go back and hit my take profit and I'd be like, oh, I've lost the trade when I should have won, which is obviously bad. So you need to give your trade space to breathe. So that's not a good thing to do. So a rule I've had ever since then in my trade plan is not close trades in drawdown. I can only close a trade if it's in profit or break even in profit, or or if it hits a stop or take profit. So those are just things to remember, because you don't want to, you've set your stop loss at wherever you have put it for a reason, because you don't think price will go over that. So anywhere, even if your stop loss is 10 pips and you have 9.8 pips drawdown, you have not been wrong, because then it could go back down and hit your take profit, because you've given your trade those parameters for a reason. So you never close your trades early in drawdown, unless, for example, there can be extenuating circumstances. For example, unless there's a sudden, unless you realise there's red map news coming up really soon, or, for example, things even with candlestick patterns, they can lie. You could be going for a sell and suddenly see a bullish engulfing, but it could still go down. So I don't think it's good to close your trades in drawdown unless red map news close. Or let's just say major news close, because some orange news is bad as well. So I'll just put as well, only at break even, in profit, stop loss hit, or take profit hit. That's a really important rule for me, because the rules of for the reasons I've just said. There's loads of things that could be people's rules. You could have, they're going to differ from person to person. For example, you could have you can find it stressful watching. If you sit and watch a trade, sometimes you can overanalyze it. Like you'll maybe see, even if you don't trade M5, you might be like, oh look, there's an M5 bullish engulfing when I'm going for a sell. That means I'm doing badly. It'll panic you, blah blah blah. So another good rule you can have is do not watch the trade once you're in. You just got to let the trade do its own thing. Like I said, you've put the parameters there for a reason. So it's best to just leave the parameters, leave the trade, let it do its thing. And then there we go. I can't even think of any other rules right now, to be honest. But yeah, rules are just other people. Everyone has their own, everyone's brain's different. Everyone knows how they feel when they're in a trade, all things like that. So you've just got to let the trade do its own thing. And then with rules, you can have your own rules to help yourself in this situation. So, for example, you could also have a rule, maybe every hour of looking at the screen, you could have a break. Have a 10-minute break. You don't have to do this. This is literally just an example. All things like that. The rules I put in are just so that you can help work out bad habits and work out the kinks of these bad habits and get them out of your trading plan and psychology, basically. So realistically, that's all you need for a plan. Obviously, this is not a proper trade plan. It's just an example so I can explain it. But all of these subheadings are things that I would have in your plan and I would put in. So I hope that's useful. Cheers.